All right, thank you for tuning in. This is Chuk Woo's channel. I am Woo. Please like, share, and subscribe. Today we're going to be talking about an important topic, that is credit score. Okay. At the end of this video, you'll understand what a credit score is, how it's calculated, what affects the credit score, and what you can do today to start improving it. All right, so let's get started. What is a credit score in the US? A consumer credit score is basically a 3-digit number, usually between 300 and 850, I believe is the max. That basically tells to banks, anyone looking to give you a loan, what is your credit worthiness? In other words, if they give you a loan, if they give you a credit card, the credit score tells them how likely you are to repay your debts in full and on time. That's all it is. The three main companies in the US that calculate credit scores are TransUnion, Equifax, and Experian. Let's get into how it's actually calculated. What I mean by that is what actually makes up your credit score. The first piece that makes up your credit score, it's called your payment history. That is whether you're paying your bills on time, whether they are delinquent, and whether you pay in full. Okay. It also includes things like missed payments. That's about a third of your credit score, 35%. Just detailing, does this person pay their bills on time? The next thing, the next largest piece of your credit score is called your credit utilization rate. That basically means how much of your available credit, how much credit that banks, credit card companies have given you, are you actually using? Let's take an example. Let's say you apply for a credit card, they give you a $10,000 credit limit. Every month you spend about $2,000. You generally have a balance of about $2,000. That means your credit utilization rate is 20%, right? Your $2,000 divided by $10,000. You typically use 20% of the credit available to you. Okay, so that's the second piece, and that's about 30% of your credit score. The next piece is the length of your credit history. That basically is just how old is your oldest account. Going back to college, I think I opened up my first credit card at the age of 19, so that gives me a little over 20 years of credit history. So that matters because credit card companies, loan providers, banks, they basically want to see how long has this person been using their credit. And the last two things are credit mix and your new accounts. Those are about 10% each. Credit mix basically means what type of credit do you have? There's really two types of credit. One is an installment type of credit. Think of it as an installment loan. You go to your bank, you get a personal loan for $10,000, you pay it off every month. That's called an installment loan. That's installment credit. The second type is revolving. Most of that is credit card debt, right? Revolving means that your credit card is open until you choose to close it. You spend, you pay every month. That's a revolving line of credit, a credit card. And then your new account history, basically how often are you applying for new accounts? Okay, so that's how your credit score, those are the factors that make up your credit score. Your payment history, your utilization rate, the length of your credit, right? Your credit mix, and then your new account inquiries. Now, there's a common term that comes up when you're talking about credit. It's called hard inquiry versus soft inquiry. What is a hard inquiry? Hard inquiry is you walk into a dealership to buy a new car. You want to finance this car. They take your social security number and they check your credit. That's a hard inquiry, right? Actually looking to open up a new account. Soft inquiry, that's basically you or someone looking for information, right, about your credit. That means you go ahead and check your score. That's a soft inquiry. It does not affect your score. You apply for a job and an employer wants to check your background. That's a soft inquiry as well. Soft inquiries do not affect your score, but hard inquiries can affect your score by a few points. You're not talking about 30 points or something like that, just a few points, okay? So soft versus hard inquiry. Now, the next piece is how are credit scores used? They're basically, again, I started at the top of this video by saying they help someone determine whether or not they're going to extend you credit, and that's what they're used for. They basically detail your credit worthiness. So banks use them to say, do I want to give John or Jane Doe a credit card? Do I want to give John or Jane Doe a loan? You're applying for a new apartment. Your landlord uses your credit to check your payment history, see if it's a good idea from a business perspective to let you even live there. And then increasingly nowadays, employers are using your credit score, right? They want to see if you're trustworthy as well, and that really factors into it, particularly when you're applying for a job that has anything to do with finance, right? You're applying for a job at a bank, you're dealing with money, you're applying for a job at the IRS, even at a casino. Any type of job where finances, money is involved, people want to see if you have history of theft, whether you have debt, because if you have a lot of debt and you're around a lot of cash, there's a temptation there to take some of that money to pay off your debt. So that's what people use it for. They want to see how trustworthy is this person purely from a credit worthiness standpoint, okay? Now, a few things most people don't know about credit score. Closing an old credit account can really hurt your score. Going back to my example, I opened up my first credit card when I was 19. I closed that account maybe 10 years ago. I actually dropped my credit score by about 20 points right there on the spot. It basically says to creditors you're trying to get rid of aged accounts. And because you have your credit history detailing back 10 years, by closing that account for me, it basically knocked like 15 years off of my credit history, because the next account I didn't open for like 8 or 9 years after that initial credit card. So people don't know that, but closing an old account, even if that account is in good standing, it doesn't have a balance, it can really hurt your credit score. Couple other things people don't generally understand: that your income, your job, your savings, your net worth do not factor into your credit score at all. Remember, it's about your credit worthiness. So even if you're a millionaire and you're delinquent on a bunch of accounts, the fact that you have a lot of money, you have savings, you have investments, it doesn't really tell a creditor anything because you're still behind on your accounts. So your job title, your income, your savings, your investments, your net worth does not factor into your credit score at all. Another key thing, and most people know this, even missing one payment, even if it's a $50 credit card payment, missing one payment dramatically impacts your credit score. All kinds of reasons why, but long story short, don't miss any payments and try not to be late, okay? And then the final thing is paying off an installment loan, right? You have a bunch of credit cards, but you only have one personal loan, one auto loan. Paying off that installment loan can actually impact your credit score negatively because it changes your credit mix. We talked about installment accounts versus revolving accounts. If that was your only installment loan, paying it off, even in good standing, oddly enough, people think, hey, that should help me out, I'm getting out of debt, but it actually impacts your credit score negatively because it decreases your credit mix. Now you only have credit card accounts open, okay? So what are a few ways to actually improve your credit score? Number one is don't hurt it. Always make your payments on time. Your credit card payments, your installment loan payments, make them on time, make them every month or whenever they're due. That's the number one way to keep your credit score high, okay? Keep your credit utilization low. We talked about the example where you have a $10,000 credit card, total line of credit, and you spend about $2,000 a month, meaning your credit utilization is 20%. Try to keep your credit utilization across all your accounts under 30%, under 35%. Now that sounds strange because people say, hey, I have all this credit, I want to use it. But the degree to which you approach the top limit of your available credit, it lets creditors know maybe this person is struggling financially. If you have $50,000 worth of total lines of credit across credit cards and you're using $45,000 each month, it basically says, why does this person need to use all of their credit? So keep it under 30%, right? Again, don't close old accounts unnecessarily, even if you've paid them off and they're a good standing. Keep them open and try to actually keep them active. And then diversify your credit mix, okay? Make sure you have some installment loans, make sure you have some revolving accounts like credit cards, etc., okay? So that's the whole spiel here today. You now understand the factors that go into your credit score, the difference between soft and hard inquiry, how your credit score is used, things that most people don't know that can negatively impact them, and how to keep your credit score high. One other thing I'll say about keeping your credit score high is routinely check your credit report. Most companies, banks, they offer at least 1 to 2 free credit reports a year. If you see any errors, contact the credit agency and get those cleaned up. That's another way to keep your score high. All right. So I hope you found value in this video. Let me know in the comments what you thought, and I'll see you next time. Take care.